So
Okay.
I see a very good example of an order block here. So I saw this a few minutes ago. Okay. This red candle here. This red candle with a long wick. This very one. Can you see my cursor?
Yes.
It's a very good example of an order block. So I'm going to show you the characteristics that make it good. First and foremost, this candle is a last sell candle. This is an uptrend. This move here, from here to here, all the way here, it's an uptrend move. First and foremost, this red candle is the last sell candle here. It has the longest wick. It has the lowest low. Yes or no?
Yes.
So this low means it's taking out liquidity from under the previous candles before it. Can you see it?
Yes.
Taking out liquidity. Then two, this candle causes a break of structure. Where the structure is breaking? Look at this structure. This eye. It breaks this eye to the upside. It breaks that eye to the upside. It breaks the eye to the upside. So a good order block must result in a break of structure. For a bullish order block, it must break structure to the upside. For a bearish order block, it will break structure to the downside. Are you getting that? Then three,
Yeah.
it breaks the structure with some momentum or displacements. You see this green candle.
Yes.
You see the size of this green candle. It shows you that there's so much bullish momentum, so much buying pressure here. This is a displacement. And now, why is it a displacement? Because you can see there is a big gap between our order block and the third candle right after this green candle. There is a big fair value gap there. Let me mark the bottom of this third candle and the top of our order block. You can see there is a fair value gap. There's a large fair value gap there. Can you see it?
Yes.
So those are three things that make this order block a perfect order block. Now, another thing you also want to look out for is the position of the order block. Is it at the top of the range of the price range, or is it at the bottom? So let's see the price range here, for instance. Let's see the price. Price started from here, came all the way here, came back here, and moved all the way up. So let's just take it from here to here and see, is this order block within the discount array? When I say the discount array, hope you know what I mean by that. Is it within the discount zone? Is it within the 50% of the price
Yes.
range?
Yes.
It's under it. So that makes it a perfect order block. So if you are going to buy, you can give this order block a consideration.
Okay.
Bearing every other factor. Are you getting me?
Yes.
So I hope you took notes of the three things I said. Let me write them out. I made mention of, I said first, for a bullish order block, let me use the word bullish order block. Bullish order block. This color is too faint. Okay. For a bullish order block. Okay. Wow. Wow. Okay, first for a bullish order block, one, it must be last sell candle before the up move. Before the hop move. Let me use that word, the up move, not necessarily the hop trend. Last sell candle before the hop move. That's one. Two, it must result in a break of structure, a BOS. Three, it must have a fair value gap. It must have a fair value gap. And four, it should be in the discount zone of the price range. Must be in the discount zone of the price range. So does that make sense now? I should go over it again.
Yes.
Okay.
What so I do the change of character when I get ready to set my entry, right?
See, first thing is when you determine your trend, you look for the appropriate order block. For instance, in this place, if we are considering this move from here to here, we are thinking of buying. You understand? We are thinking of taking a buy this thing. Let me take all this away. If I'm going to buy here, where am I going to buy it? What's the first thing I will do? The first thing I will do, I'll mark out my inducements. I'm assuming that this side, the price just got to this top here. It has not made this retracement down. It has not made this pullback or this correction. Or maybe let me go to somewhere I can use the replay to GPBAUD. Okay. GPBAUD 4 hours time frame. Okay. Give me some time. My chart is trying to load up. Give me some time. I'm ready to go right down. Ready to go right down. What is happening here? What's wrong with my network? Okay, it's coming up. Okay, so GPBAUD, GBPAUD. Gosh. What happened to those kids? I've not heard your voice in a while.
Who, me?
Those kids that were around you the other day.
Oh, they come here when they get out of school in the afternoon before my
Oh,
niece come pick them up and take them home.
okay.
Yeah.
Okay, so this was the chart we were looking at. So this was the chart we were looking at. So let's do some replay. Let's assume
Okay.
candle. Let's assume price was here.
Okay.
If price was here, we're just considering this move. If you look at this whole move entirely, this is actually a downtrend. Price is moving in
Okay.
a downtrend. Now price is retracing. We could retrace to maybe the 50% of this price range before it continues the down move. So since we're anticipating price to retrace into a premium zone before moving down, we can buy all the way to that premium zone. So let's assume we want to take a buy trade here. First thing I said you look for your inducements. You look for your inducement. This is your inducement. This is the first pullback. Why is this an inducement? Because there is that temptation to buy at this pullback. Most retail traders will wait for price to come back to this pullback, around this pullback, to buy. Are you getting it? But
Yes.
smart money will allow them. Smart money will allow them come here and push price below this place to take all their stops, to take the liquidity of them. So now, under this inducement, we now look for our unmitigated order blocks. Is that not what I've been saying all this while? So now, is this another block?
Let's see.
This green candle, is it another block? Does it meet our criteria?
Yes.
Is the last sell candle one? Does it cause a displacement? No, it doesn't cause
No.
a displacement. It does not cause a displacement. You can see that there is no space between this candle and the third candle. As a matter of fact, after it sweeps liquidity, it takes out the stops under this big red candle. It takes out the liquidity under the law of this red candle. It refused to move price up immediately. You can see there's something like what do we call a ranging market here, market range for some time before it pushed out. So I won't take this very serious. Now look at this very other block here. This red candle with a long wick is a pin bar. It takes out liquidity by going lower than every other candle there. It causes a displacement. There is a fair value gap between it and the third candle, and it causes a break of structure. It causes a break of structure. And just like we saw before, is within the discount zone of this price range. Is in the discount zone. So since it's in the discount zone, it's a good order block. So we mark it out. We mark it out and wait for price to come to it. Sometimes price may not even come to this other block. It may just come within this fair value gap and push up. So that's why sometimes if price doesn't even come to your other block, as long as it has taken out this liquidity below this pullback, as long as price takes out this inducement, once price takes out this inducement, you go to your 15 minutes time frame or your 1 hour time frame and look for a change of character. So let's play price and see. Did price close below the inducement?
No,
It did. It swept
it
it.
did. Yes.
It did. It did, but it didn't come to our order block. It didn't come to our order block. I wouldn't even do anything here. Normally, I can trade this. I can still go to my 15 minutes as long as it swept this low. I can still go to my 15 minutes and wait for a change of character. But I won't do anything here. You know why? I want price to come within at least the midpoint of this fair value gap, even if it is not going to touch this other block. Do you get what I'm trying to say? I want it to come within the
Yeah.
midpoint of this fair value gap, even
Okay.
if it's not going to touch this other block. So this for me is too shallow a move. So
Okay.
it's like this one is price is creating more liquidity here, which it may come back to take out later. So let's see. Okay. So now price has moved up. So that means this liquidity is no longer in play. We'll look for another one. So I'll put it here. That's a valid pullback. Or am I wrong? Is that
Let's
pullback
see.
valid or not?
Let me see. Yes, it is.
It's valid.
Yes.
So I'll put it here. So let's play it again and see if we get anything. Okay. So this is where price ended for the week. So I'm still expecting price to come, take out this pullback, and come within the midpoint, at least the midpoint of this fair value gap. So if price does not do that, I'll look for another entry position. Maybe price will break this high. You understand? Break this high, give us new displacements, create new other block, new inducements, then we can shift our position higher. I don't know if you get what I'm trying to say. Because from here now, from here, let me see. This, okay, this is a pullback. Price pulled back here. It didn't go higher. This is a pullback. This is a pullback. That's not a swing low yet. Price goes. If price takes out this inducement, it's going to create a new swing low. So if it takes out this inducement to create a new swing low, if it goes higher than this. So let's see other examples. Let me go back to the characteristics I mentioned of a bullish order block. You know that for a bearish order block, we'll be looking at the opposites.
Okay.
You know that, don't you?
Yes.
Yes. So for a bullish order block, we have the last sell candle before the up move. So for a bearish order block, that means we have the last buy candle before the up move. Take note, I didn't say the last bullish. I didn't say the last bearish. I said the last sell candle. This last sell candle here, you see this one, for instance. This one is the last sell candle here. And it's bullish, it's green. Because many traders have this idea that green candles are bullish, red candles are bearish. Not all red candles are bearish. Hope you know that. Look at this big candle, for instance. Let me go back. Let me go back to the other place so that I can eliminate the other things around it. I just hope I'll find it good. I found it here. Okay. This candle, look at this candle, for instance. Is this candle bullish or bearish?
It's bullish.
Why is it bullish?
Because that's the last bullish candle.
Because it's the last bullish candle. Is that what you said?
Yes, before the move up. Yes.
It's not the last bullish candle.
It's not.
It's the last. See, this candle made the last sell move. This candle made the last sell move. It's a pullback candle, you remember, before going up. Its tail, this tail coming down here, sellers brought price to this lowest point before buying pressure setting. Are you getting me? But this candle ended as a red candle. It ended not as green. So being red means it opened higher and closed lower. So based on color, many traders will say, oh, this candle is bearish. But this candle is not bearish because if you look at the range of this candle from the top to the bottom, more than half of it is bullish. I don't know if you get what I'm trying to say. More than half of it is bullish. From this bottom, this tail here is bullish pressure. This tail on top is bearish pressure. It is selling pressure that makes the top wick in a candle to be formed. And it is buying pressure that forms the tail of the candle. Does that make sense?
Yes.
Does that make sense? Now, if you look at the candle very well, you see that the tail is far longer than the top. The tail is far longer than the top, and it occupies, I think, more than 50% of the entire candle range. So this candle is bullish. Look at this candle. This candle, obviously looking at it, you know that this candle is bearish because a good part of it is covered in red. It's only a small portion, which is this tail, that is bullish. This tail is caused by buying pressure. Buyers pushed this candle from the top all the way down. This candle was totally red at some point. Are you getting it? Then buyers came into the scenario and said no. They tried to push it and they pushed it up to this point. They couldn't go beyond this point. So this candle has more sellers than buyers. I don't know if what I'm saying is making sense to you.
Yes, it is.
Okay. So you don't just conclude a candle is bullish because it's red. Because it's green. A candle can be red and it's very bullish. Look at this. Look at this candle. Is this candle bullish or bearish?
Mm,
Can you see it?
this, it yes, so they're slightly green.
Don't tell me about color. Don't tell me
It's
about color. Don't tell me about color.
I say it's bullish
Why is it bullish?
because all of those will make up one green candle.
All of what?
All of those small candles will make up one green candle.
No, I'm talking about this particular one. I'm not talking
Oh,
about
okay.
the other ones by the side. I'm talking about this one. This one is an indecision candle. The
Oh,
top
okay.
and the top, look at the body. The body is so small. Look at the tails. The tails are almost the one at the top, the wick, the tail, they're almost the same thing. Are you getting it? Then look at this
Yeah.
one. This body is almost like this other body. It's almost non-existent. But look at under it. It has a long tail to the bottom. And I told you, I said, this bottom tail is as a result of what? Buyers pushing price up. They push price up. So this candle is bullish.
Okay.
Now look at the next one to it.
Okay. I never thought of that. Yeah.
Does it make sense?
Yes.
Now look at the next one to it. This candle is bearish. We just have the buying pressure here that caused this tail, this bottom tail. It's not as much as the selling pressure that caused price to come down. At the time, price was at this high. Sellers brought it all the way down. This candle was totally bullish to this high. Then sellers brought it all the way down. They forced it down. Now this candle is bearish, even though the body, which is almost non-existent, is green. Do you get it? So don't let the colors deceive you.
Yes.
It's not about the color, it's about the formation of the candles.
Okay.
This one, look at this candle. This is an indecision candle. This is an indecision candle, though this candle is an indecision candle, but a large part of it is still bearish. This is a bullish candle, but this one is a bullish candle, but the buying pressure is not much. That's why the body is small. So
Okay.
the large candles tell you that there's so much buying, there's so much selling pressure. That's why you see that the body of the candle is much bigger than the tails. This one, the body, this one, the body, look at it. So this is a very bullish candle. This is a very bullish candle. So let's see. You see this red, you see this red candle.
Yes.
You see it. This one is very bearish. This bottom tail is buying pressure. But if you look at it from the top to the bottom, more than 70% of this candle is bearish. Yes or no?
Yes.
Your yes is not convincing. Do you understand what I'm saying? What I'm trying to teach you?
Yes.
Okay. Now look at another candle here. Look at this candle here.
Okay. Let's see.
Is this candle bullish or bearish?
That one is bullish.
Why is it bullish?
Uh, because that kind of has a lot of buying volume. Buying.
It
Is
has
that
a
correct?
it has a lot of buying volume, yes. But if you look at it, look at this long tail. This long tail tells you that sellers have come into the market and they push this. See, oh gosh. If you take this candle from the top to the bottom, sellers pushed it almost halfway. Am I right or wrong? Sellers pushed it almost halfway.
Okay, by the size of the wick. Okay.
You see the wick. That's why the wick formed. So
Yeah.
and you see that this selling pressure is confirmed immediately by the next candles. It caused a push to the downside. Look at this candle. Is it bullish or bearish? This red candle.
It's bearish.
This one. Can you see the one I'm touching?
Yes.
Is it
Yes.
is it bullish or bearish?
It's bearish.
Why is it bearish?
It has a lot of selling pressure. The
Where is the seller?
sellers
I can't see the sellers.
uh
Where are
in
the
in the wick,
sellers?
in the long wick.
That long wick, is that long wick a bearish pressure or buying pressure? Ask yourself.
Let me see. Buying pressure.
So why did you say it's bullish? Why did you say it's bearish?
I don't know. I guess I looked at the red candle.
No,
Yeah.
see, look, you
Yeah.
see, when you see the bottom wick, when you see the wick at the bottom, every wick at the bottom is caused by buying pressure. Forget about the color of the candle. The bottom wick is buyers. The top wick
Mhm.
is sellers. So all this wick at the top, sellers cause them. Sellers cause them. It's selling. Selling cause them. All the wicks at the bottom, buyers cause them. Are you getting me? So
Yes.
if you look at this candle, if you look at this
Mm.
candle, I can't find. Okay. What is this? Is this a fib? Yeah, this is a fib. Let me use a fib from the top to the bottom. See, when you see a candle like this, hmm,
Okay.
if you look at this candle now, the body of this candle, the body of this candle is at the top. It's at the top 50%. Are you getting me? Now,
Yes, I get it. Let me see.
let me let me do something. I want to do something. Where's my replay tool? I'm going to take out everything before it. Okay, so that you can see it clearly. You see the body of the candle? I have my fib. The body of the candle is at the top 50% of the range of the candle. Funny enough,
Okay.
if you divide the body, this top 50% into two parts, you see that the body of the candle is even in the top 25% of the range. That means this red part, which is the bearish part, only makes up 25% of the entire range of this candle. Why? So that means sellers are in control of 25% of this candle's range. Buyers are in control of 75% of the range. So does it make it bullish or bearish?
Bullish.
It makes it bullish.
Yes.
It makes
I
it,
get it now.
you
Yeah.
get it. Yeah,
Yes.
it makes it bullish. This is a very, very bullish candle because when you see the body is in the top 25% of the candle's range, it's a very bullish candle. There is no doubt about it. Let's look at this one. Look at this one. I'll bring the fib there now. Okay, let's see whether how bullish or bearish it is. Okay. The body is in the top 50%. Yes or no?
Yes, it is.
So if the body is in the top 50%, that means this candle is bullish.
Okay.
Are you getting it?
Yes,
So
I'm looking at it. Yes.
this candle is look. So the bullish pressure, look at the bullish pressure. And this bullish pressure was strong enough to cause this it resulted in these big momentum candles. Are you getting it now? So, so all this is just by the wayside, at least. It's good. So this is your order block.
Right
Look
there.
for an order
Okay.
block that meets all four criteria. One, it must be the last sell candle before price makes an up move for a bullish order block. The last sell candle before price makes an up move. Two, it must cause a break of structure. It must cause a break of structure. Three, it must cause a displacement, meaning it must have a fair value gap attached to it. It must have a fair value gap attached to it. And four, it should be in the discount zone. It should be in the discount zone of the price range.
Okay.
It should be in the discount zone. So any other block that has fair value gap attached to it, and that fair value gap has not been mitigated by any candle.
What you watching that pair? What pair you want me for the markup for tomorrow?
Okay.
Because
Markup
I know the market is closed right now, but maybe I can look at
in
one.
the next market is open now. It's 10 already.
Uh, which
Market,
which
market is open now.
which instrument can I
You can
trade
use
now?
this. You can use this. GPBAUD.
Oh, okay.
Or GPB
Well, it's probably open on your end, but not mine.
Okay. No,
Yeah, I
the
still
for,
probably should be able to use.
the forest market is a 24 hours market, so it's opened
Oh, okay.
already.
Okay.
Your session is New York. It's not opened yet, but Asian session is on now. I think
Okay.
yes. Let me see because normally, yes, it's on. I can see it counting here. The market is
Okay.
open. Yes, it's been open now for about 10 minutes.
Okay. So I'm
Mm.
gonna look for a setup on that pair.
Okay, so look for setup on this page. So
Okay.
everything we said about the bullish candle, the opposite applies I mean, everything we said about the bullish order block, the opposite of it applies to the bearish order block. So for the bearish order block, we'll be looking at the last buy candle before the down move. It must also result in a break of structure to the downside. It must have a fair value gap, and it should be in the premium zone of the price range. For a bearish order block, it should be in the premium zone of the price range. So I hope you will be able to mark out some unmitigated order blocks for me, both bullish and bearish.
Okay.
So I want to see that. I want to see that tomorrow.
Okay. I'm gonna mark some up later on.
So when can we meet tomorrow? I know you are resuming work tomorrow.
At 7 p.m.
Okay, it's all right by me. All right, have a great night.
All right. Thank you. All right.